So the big question is this: how do investors like us who don't have a PhD in finance or millions to start investing, how do we grow our bank accounts to build real savings and retirements and yet still have the time to do what we really love? That is the question, and this podcast will give you the answer. All right. Hey guys, John Wood here with the Stock Market Secrets Podcast. Super exciting today in the city, and in the distance we can hear a little bit of a car alarm, which is pretty interesting because it makes you wonder, there are a lot of things that happen where, there's this massive shift in the economy, in market sentiments, in financial industries, whatever it is. And because of this shift, it fundamentally changes the way that people perceive, financial assets. And it happened in the crash of 08. It happened in so many financial crises where, you'll have assets and these things will just tank. Crash of, I think it was 1953, right? The whole world basically ended. It was crazy. When you look at the impact that has on these financial markets, what's really interesting is these industries, they'll go down 50+%, and just crash, and plummet. And what happens in the individual stocks, it mirrors that, right? So you'll have a very similar outcome, and it's one of these equities where you'll have stocks that are trading $100, and they'll go down, hey, thanks so much, to $10 stocks, $5 stocks. And it's crazy to see that, because what happens is this massive shift in investor sentiment. Originally, people are so convinced that the stock market's amazing, it's going to do amazing things. But then what happens in this shift is really crazy, because it shifts, not only prices, but more importantly, the psychology of investors abroad, right? So instead of people thinking the most amazing things at the top, it gets to the bottom, and everyone is just freaking out. They're crazy. They're like, oh my gosh, what is going on? And what happens is that the people that just keep buying at the highs and at the lows, they average out, these overarching index prices. They get these total average returns in the market based more on a collective growth pattern of, whatever the asset classes, be it stocks, bonds, stuff like that. So they'll do really well because they understand the importance of long-term horizon, and they use that as to their advantage, right? And they'll sit through those crashes, sit through those pullbacks, and understand that's just part of a balanced strategy. There will be temporary declines in price no matter what they're trading. And they use that for advantage. They know there are a ton of people, and they're going to freak out and sell those lows. And those lows are really the best time to buy for so many people. Because of that, they get these amazing prices, no matter what, which is really powerful. Because now, instead of being reactionary, they're actually being proactive. And they're taking the cash that they originally had on the side, and they're using that to invest in rock bottom prices. And because when they do that, they create this very powerful shift in wealth, where the people that are more experienced, maybe just the people that have invested more time, energy, liquid capital, whatever, into their education, that education starts to really pay off in these kinds of crises, because they understand that this is a temporary decline and it'll come back up, and they use it as an opportunity to buy ridiculously cheap stocks, which is so powerful for a lot of people, because they'll use that and then they'll get in, and then after they get in, what happens is really crazy, because it's at the bottom, everyone will freak out as it's at the bottom. Industries are down, massive double digits percentage points, and it's crazy. And then these guys that have just been waiting all along, they'll come in and they'll just buy, whatever the stock is, whatever the index is, whatever is being traded in the financial market, they'll get in at these rock bottom prices, using technical indicators as a very big factor, but also public psychology and overarching news and media, and they can just have these surreal gains, because it's really tough to time an exact pop for whereas that bottom in an index. But when you look at these individual stocks, individual securities on a one-by-one basis, now you can actually technical analysis and actually really get, hey, thanks guys, what these stocks are, what these are, and use that to your advantage to get the best performance possible. And it's really, really powerful stuff to see that. And at the same time, it's like, how do you actually get it to happen, right? And that's a big thing for a lot of people. They're like, okay, well, how do I actually get the best returns on my portfolio, right? How do I build my portfolio, stuff like that, in the shortest amount of time possible? And at a very fun level, it's tough because it comes, hey, thanks so much, through a lot of work and experience, but also sort of like at a grander level, it's just the guys that have put in the work and experience. So it's really, really interesting to see, you know, as we're at a high market. On your left, thank you. You'll see a ton of people, and they're really, really trying to predict these stocks, but it's really tough. But then if you look at individual stocks, if you look at like a per share portfolio, you have people that are absolutely crushing it. And what they'll do is they'll create these individual portfolios with just a ton of stocks in them. And because they're on a stock by stock basis, they're much easier to time, right? So because you can time them, you use it as a means to create these outperforming results, these outperforming returns. And it all kind of stems from that ideology that you can time these individual stocks, but not really these overarching markets. So you use that as a means to just crush it in the market. It's really, really cool stuff. So back to the principle, right? Excuse me, thank you. If you're looking at these huge indices or these massive companies, and they're looking super high, but you don't necessarily see a technical setup, that's okay, right? You don't have to have the right analysis on every single stock, because I'll tell you what, that's really tough to do. What I prefer to do is go through a whole bunch and create sort of like a funnel of potential positions, right? So look at like 100 stocks and maybe pick 10 of them that look nice and put them on a watch list. And then once you have those 10 on a watch list, what you can do is you can apply technical analysis, maybe just buy 1 or 2 or 3 of them, and it's all based on finding that really sharp technical stuff, and then going very hard into the analysis that you have, right? So if it's a long position, you're going to go hard on that long position, right? You're not messing around. It's all based on this analysis, and then you can right? Commit to it as part of your diversity portfolio, whatever it is, depending on your time span. You know, longer time span, a little more diversification. Shorter time spans, 6 months, maybe you're a little bit crazy. Depending on your level of experience, but you should usually start with about a 5 to 7% portfolio diversification when you're learning, so that, you know, if you make a mistake, you're not going to get super screwed on it, because that would kind of suck, you know. But at the same time, you really want to focus on this ability to go out there and create the results that you want, crush it, and it all stems from personal commitment to go through the process. It's just like a big checklist, right? Like you put forward the time and effort to go through a bunch of stocks, and you're going to find some really good trades. But at the same time, right, if you just trade 90 noon and you go through the pre-market shares every day and watch your screeners, you're going to find some really good stocks. So now, to the kind of game you want to play, and then playing that game to the absolute best of your ability to create the maximum result possible in the marketplace, almost exclusively in your own capacity to grow and achieve, and use that as completely just insanely powerful fuel for your future growth in whatever field you're doing, right? So when there is that bottom, you can find those 1 or 2 stocks like GE, or stocks like Ultra Clean Holdings, UCC or UCTT. I think a position on that, I don't know, probably 30% in a couple weeks. Maybe like, it's just all days on those technicals, right? And it's so powerful, because then you're in at the bottom, but you're not in the bottom of the market where you might have to be a 10, 20, 40% return for the next year. You're in at the bottom of a stock where you can really crush it and quadruple your position. I know there's this one company, God, what was it? It was like Applied Material, AMAT, yeah, AMAT. They're like a $4 or $5 stock, and I'm like, freaking 17, 18, $20. Plus, I think, it's like, that's a couple years to cash up. You know, a ton of stocks took a dip in 2016. So these guys are out there, and they've just massively expanded their fundamentals, but also just the growth that they've had. It's really, really powerful. And because of that, oh gosh, I don't want to like run into this. They've had this insanely powerful stock run up where they're out there and they are just crushing it. And the reason they're crushing it is because they put in all this amazing, amazing effort in the professional state of their company, of whatever they're doing. And because of that, they're now reaping those rewards, right? They're getting those results out of the marketplace based almost exclusively on that individual company growth. That individual company growth is so ridiculously powerful. All of a sudden, these guys are like AMD, these stocks are tripling a technical setup. Once you have the technical setup down, trades down, you can have these positions and crush it with them based on that understanding of whatever you're doing at a fundamental level. You can now leverage that up so much. And it's all based on, you know, where you're at now, but more importantly, where you want your facility and taking action to massively multiply the wealth that you have that you want or deserve, right? And it's such a powerful concept because for a ton of people, you know, maybe that doesn't happen, maybe they don't focus on it. A lot of times it's just difficult to really get a whole ton of it done. Excuse me. Thanks, guys. So when you... Thank you. Let's see. Where do we go here, guys? We shall figure it out. But anyway, so here's the deal, right? There are tons and tons and tons of stocks right now. Every single day, there's a stock. I mean, basically, right? There are just thousands and thousands of stocks. There's no shortage of them. And so what you can do is if you can just find those 1, 2, 3, 4, 5 stocks every single day, they're going to go out there and just crush it. What happens is this really, really powerful change in your portfolio where instead of having reliance on maybe the overall market, you're instead reliant on some of your top picks, right? With that 80-20 principle, you're getting the maximum amount of results possible out of the work that you're doing, right? So instead of taking this broad approach, like right now, the market is just, it's really, really, really hot. So because of that, I'm not really in any indices, any ETFs, just because it's kind of risky, you know, it's pretty hot. But there are individual positions, individual stocks that I know are going to absolutely crush it. And based on the technicals, you know, they're predicted to just absolutely crush it in, you know, the next 8 to 16 months. And with those, some of them are closer, right? Like 4 months, 5 months. And those positions have already done really, really well. And I'm expecting, you know, a lot of them really do just double. And we'll see how it goes, right? It just depends on time. You know, it only gets better with time. Thank you, guys. So with that, you know, you're focusing on that very, very select aspect of the marketplace. You can use it really powerful fuel to leverage your results by focusing very deeply on the one thing that makes the most sense for you to control. And once you have control, you can achieve, you know, whatever that aspect is for you. You're just able to leverage these very, very powerful returns in your portfolio, wherever that might be. Anyway, enough about performance, because performance is always temporary. You just kind of have to see where it goes. It's super fun, though. I mean, I love it. Am I going the wrong way? I might be going the wrong way. This is kind of interesting. So if I go this way, is this the wrong way, or is this the right way? I feel like this could be the right way, but it's not the right way, which is a shame. I feel like a lot of times, you know, when you start investing, you start, hey, thank you, to go one way, and you think that that way is the way that's just going to crush it for you. But a lot of time, you know, you can get confused and caught up on things that maybe don't matter as much. And hey, thank you. And so when that happens, it's tough because you just kind of have to refocus and understand exactly what needs to happen with your positions so that you can get back to maybe that really powerful place that you used to be, but you take a temporary detour from it, and all of a sudden, right, like I'm on this weird side street, and you just have to get back on path. And the really important thing is to have that end in mind, that goal that you want to achieve, because once you have that, now you can focus on, you know, all your efforts just trying to get to that one location, and being able to just ignore the distractions in the marketplace is a very, very powerful position that it's very, very tough for a lot of people, right, to say no to things. It's tough because, if you're maxing yourself out, hey, thanks, and you're really, going hard every day, and your time is so valuable, you'll get a ton of things flooding your way, and you just kind of have to say no to some of them, which sucks, because, you don't want to have to do that. And it's really, really important to be able to take advantage of opportunities as they come up, right? Taking advantage of these, whatever happens to be, a lot of times can produce these insane opportunities. But once you get to a certain point in your portfolio and your management, and there's just so much going on, that it just makes sense sometimes to take a step back and say, look, I got a lot of stuff going on. I need to see how it's going to work out. I need to focus on what I'm already in before I start to think about all these, additional things that I could be adding or working with. Because at a fundamental level, you understand that, like, there's only so much that can get done in a certain period of time. And so because of that, you start to have to say no to things. Focus exclusively on that 10% that yields the 90% of results. And dude, is there like a crosswalk here? Oh my God, there's a crosswalk here. Yes. Okay, cool. So with that said, it's tough, right? So like, if you have situations that come up and like you just have to say no because of your time commitment, because of whatever you're doing, like, it's really weird because I didn't used to think this way. I used to go 100% all in on whatever could happen to pop up. But then what's really interesting is like, I would start to just do and do and do and do. And what would happen, hey, thank you guys so much, is, right now, I got a pretty freaking slim margin to get to this, we're doing a presentation today, so get this presentation and get all this review done on time. And like, I can't really, stop into a company or take a call or do whatever when I'm focusing my energy on this podcast, right? Because I want to impact so many people's lives by quality financial education, which is super important. And because of that, this time is so valuable to me that, like, I wouldn't want to just let it fly by. So that's why I think it's so awesome to have a focus on whatever you're doing, so that you can understand how to leverage yourself more. And on your right, thanks, and then get more out of your time, right? So with whatever it is you're doing, you can think what would be maybe a complementary activity that would enable you to get more out of the day, out of whatever you're doing, so that at a fundamental level, you're increasing your output, and because of that, you're able to just rocket up the amount of quality that, oh gosh, that comes out of what you do. Okay, let's see, where are we is the real question here now. Okay, cool. Alright guys, well hey, I think that was a really powerful episode. I'm gonna have to go and get to wherever I'm trying to get to, and hopefully we'll get it done on time. So hey, take the knowledge, take the information we've gotten here, go out there, apply it, crush it, and do whatever you can to have just the biggest freaking impact that you can, through financial markets, through your dreams, through your goals, whatever it is. I want you guys to go out there and absolutely crush it. So hey, thanks so much, have an awesome day. Hope you got a ton of value from this, and I'll see you guys later. Bye.
Want more stock market secrets? If so, go get your free copy of my best-selling book, 9 to Noon. You can get your free copy plus $11,176 of unannounced bonuses it took me years to uncover, completely for free at 9tonoonsecrets.com. Inside 9 to Noon, you'll find the top 38 secrets you can use to double your portfolio every 2 years and make upwards of 10% per trade daily.